The United States stands as a global economic giant, yet it carries a persistent and striking imbalance, a trade deficit that reached over $900 billion in 2024. This means the nation imports far more goods and services than it exports, year after year. But why? What drives this massive gap in a country with such wealth and innovation? The answer lies in a mix of consumer habits, economic strengths, global dynamics, and policy choices. Let's unravel the reasons behind America's huge trade deficits. First, the appetite for imports. Americans love to buy clothes from Bangladesh, electronics from China, cars from Germany. In 2024, imports topped $3.2 trillion, fueled by a culture of consumption. The U.S. is the world's biggest market, and its households demand variety and value. Domestic production can't always keep up or compete on price. Take smartphones. Most are assembled abroad, where labor and manufacturing costs are lower. Meanwhile, exports, like machinery or soybeans, hit just $2.3 trillion. The result? A gaping trade imbalance, driven by a nation that shops globally. Next, the strength of the dollar. The U.S. dollar reigns as the world's reserve currency, trusted and hoarded by nations and investors alike. This power keeps it strong, sometimes too strong. A robust dollar makes American goods expensive overseas. Imagine a European buyer eyeing a U.S.-made tractor. At a high exchange rate, it costs more than a local option. At the same time, that strong dollar makes imports cheap for Americans. A Japanese TV or a Brazilian orange suddenly looks like a bargain. This currency dynamic tilts the trade scale, boosting imports over exports. Then there's the shift in production. Decades ago, made in the USA dominated factory floors. Today, globalization has rewritten the script. Companies like Apple design in California, but build in Asia, chasing lower wages and efficient supply chains. In 1980, manufacturing accounted for 20% of U.S. jobs. Now, it's under 10%. Imports fill the gap. Textiles, steel, toys, while exports lean on high-value niches like aerospace and tech. The trade deficit swells as America outsources more than it ships out, a byproduct of a service-driven economy. Energy tells a twist in the tale. For years, oil imports bloated the deficit, billions spent on barrels from the Middle East. But the fracking boom flipped the script. By 2020, the U.S. became a net energy exporter, pumping crude and natural gas worldwide. Yet the deficit barely budged. Why? Consumer goods and industrial imports still dwarf energy gains. Oil exports rose, but iPhones, cars, and clothes kept flowing in. Energy's triumph couldn't offset the broader trade tide. Finally, trade policies and deals. The U.S. champions free trade, NAFTA, WTO, countless agreements, lowering barriers for imports. Critics say this hands foreign competitors an edge, flooding markets with cheap goods. China's rise amplifies the strain. Its exports to the U.S. hit $500 billion in 2024, while American goods to China lagged at $150 billion. Tariffs under Trump aimed to fight back, but the deficit persisted. Global supply chains and consumer demand often outpace policy fixes, leaving the gap wide open. So why does this endure? The U.S. can afford it, sort of. That strong dollar and deep financial markets let the nation borrow to cover the shortfall. Foreigners snap up U.S. bonds, funding the deficit with confidence. But there's a catch. It's a debt to the world, growing yearly. Some warn of vulnerability. If trust in the dollar slips, or if creditors pull back, the system could falter. For now, the trade deficit rolls on, a mirror of America's economic might and its global appetite. This is the story of the U.S. trade deficit, a nation that consumes more than it creates, powered by a currency others crave, shaped by a world it no longer fully builds. It's a boon for shoppers, a burden for balance sheets. Some see it as a sign of strength, open markets, boundless choice. Others a risk, dependence on foreign hands. The question looms, can this imbalance last? The future hinges on what America buys, builds, and believes.